All right, according to a new survey from Morgan Stanley, asset owners consider diversity and inclusion to be the top environmental, social, and governance factor regarding their organization's investment decisions. There's also a near consensus that more diverse investment teams help drive strong financial returns. Let's talk more about this with Morgan Stanley Vice Chairman of Wealth Management and Managing Director Carla Harris. Carla, always nice to see you. Thanks for taking some time. I was reading this report, and something you wrote about, or your team wrote about at the top, caught my attention. You write about this $1 trillion blind spot that women in multicultural businesses face here. Talk to us about that.
Yes. Well, first of all, thanks for having me, Brian. And that was actually the result of our first white paper that we put out a couple of years ago, where we talked about the fact that women and multicultural entrepreneurs, if they were invested in at the same rate as their opportunity to generate revenue as a percentage of who they are in our economy, it would represent a $1 trillion opportunity, which is a huge opportunity for investors, both institutional and family wealth advisors, as well as high net worth individuals to invest in. And that was really highlighting the inequity of the distribution of capital, both to women and multicultural entrepreneurs. But it's a huge opportunity. So it's not, Brian, about the right thing to do. It's about the commercial opportunity that exists.
Who is doing it best, Carla? I read a little bit further down, and you highlight public pensions seem to be focusing or to be the gold standard in focusing on diversity, right?
Yes, and I'll have to tell you, and that is among large asset owners. So we did the survey of public pension plans, endowments, and foundations. And while 87% of that universe says that they believe that diverse teams give better outcomes, there was still a large percentage of all of those asset owners who still thought that there was a trade-off, with the exception of public pension plans, who frankly, Brian, have been at it a lot longer than some of these other larger asset owners. And they have deployed strategies like emerging manager programs, but they say very clearly in the survey that there is not a trade-off between investing and having diversity as a priority and the returns that you will get. And part of it, I think, is the experience that they've had over 25 years making this a priority, not just in their investing teams, but more importantly, being intentional and accountable to investing with emerging managers that have been founded by people of color and women.
Carla, it's Julie here. I'm always curious when I see surveys like this, if there is a gap between my intentions and my actions, right? And so when I look at the top ESG factors as found in this survey, diversity and inclusion, human rights, and human capital, I have to wonder, are they really investing this way, or is it sort of aspirational?
Yes, I got to tell you, Julie, that was the big surprise and aha for me, that there were still so many, 56% of these asset owners who said that they thought that there was a trade-off. And I'll take you back, Julie, to about 15 years ago when the conversation around ESG began, really. People were questioning whether or not you could really do well by also doing good. Now there's a lot of data that's out there that shows that there is no trade-off if you align your priorities around ESG. And let's be honest about it, Julie, the S is quickly becoming the D. It is diversity. And you see public shareholders now asking corporations to be accountable around what they're doing with respect to diversity. And I think that's only going to intensify as we move forward, because millennials and Zers clearly care about this space. And they are becoming the dominant population in the workforce. And they're going to drive a lot of the wealth and a lot of the investments going forward. So the accountability issue that public pension plans have felt, from government mandates to it being part of their legislative mandate to looking at the underlying constituents in these public pension plans, that accountability is now going to start to spread, I would predict, over to the corporations and their endowments and pension funds, because their shareholders are now going to start to ask the question, who's managing the money? So I am very bullish that we will start to see a transfer of assets to some of these emerging managers, women and multicultural emerging managers.
Yeah, and you also see it on the corporate side, right? Organizations like NASDAQ saying you have to have diverse boards in order to even be listed. So
Absolutely.
Your optimism is great and amazing here, but it feels like we still have a ways to go, right? So What are you going to want to see in the next 5 to 10 years to further convince you that this is real, right? What kind of milestones or markers are you looking for?
Sure. So here are the recommendations that we make in the report. Number one, to continue to publish the data around the performance of managers that have been founded by people of color and women, because the more data you put in the marketplace, Julie, the more you're going to see change. Because as I like to say, those who don't get it on the diversity front, they will hug the data, and the data is irrefutable. That's number one. Number two, have a measure of accountability. Make sure you standardize your process. I want to see large asset owners have a standard process around asking about diversity at those asset managers where they're looking to deploy funds. Who do you have on your investment teams? How have you changed that? How many assets that have you invested in that are founded by women and people of color? So looking at that data, what I'm expecting to see over 5 years is I'm expecting to see a market increase. That's how we'll know whether or not we are in fact making progress. And then to do this survey again. And if we do this survey 12 months from now, 18 months from now, I would expect that we would see far less than 56% of those that are in the survey say that they believe that they're making some type of trade-off there. The other thing that I would expect to see is that consulting firms will also standardize their practice around searching for and doing research around some of those same managers. And you don't see that across the board today.
And finally, Carla, I got to ask, since we were just having this discussion about that there might be a change at the top of the Federal Reserve, as somebody who is at a large bank, is it time for a woman at the top of the Fed?
Now, I'm always going to say the more women we have in positions of leadership, Julie, the better off things will be. So I'm going to leave it right there.
I like it.
Fair enough. Morgan Stanley, Vice Chairman of Wealth Management and Managing Director, Carla Harris. Always nice to see you. Hopefully next time it's back in studio. It's been a while. Have a great rest of the week.